Hey traders, it's John Fortune here with this week's Weekly Forex Forecast for the 2nd of March to the 6th of March 2020. As always, what we're going to do is we're going to start off by looking at the US dollar index and crude oil before running through a number of markets, looking at the key levels of support and resistance in the process. I'm also going to be highlighting some of the targets that we're going to be looking for in this coming week and also for the weeks ahead. So, as always, I hope you're enjoying your weekend. Let's jump over to the charts and see where the money is this week. As always, we're going to start off by looking at the US dollar index, but before we look at the US dollar index this week, we have to go and have a look at the S&P 500. Last week, we corrected about 16% all in 1 week, and this was a pretty big drop, and it actually caused quite a lot of volatility in the Forex markets as well last week, and it also has implications for the Forex markets going into next week as well. So we have to bear this in mind. This is linked to the ongoing coronavirus issue and the anticipated disruption to the global economy. Because of this sell-off last week, it is not going to be as simple this week as going into the markets and just looking for a strong bias in the dollar. And it means we're going to be going into the markets this week, trading the currency pairs on their own merit without a strong bias in the dollar one way or the other, although we're still going to have a look at the US dollar index for what we are looking for in the index itself. So if we come back and have a look at the dollar index itself, you can see we had this big sell-off to the downside last week. We had a lot of volatility coming into the Forex markets and in the US dollar itself because of that steep sell-off in the S&P 500 in the stock market last week. There are many reasons why the currencies in the stock market are linked, but if you just take, for example, the fact that the stocks themselves, if they're priced in US dollars in the S&P 500, this will mean that a selling of stocks also brings with it a selling of US dollars, and especially if you have foreign investors buying stocks, they will be converting those dollars back into the domestic currencies that they used to purchase the stocks in the first place. So the decline to the downside in the S&P 500 is affecting the Forex markets, and it will continue likely to have an effect on the Forex market next week. Although we are still looking for further advances to the upside, you can see we had no reversal patterns to the upside last week. We just had a steep sell-off. We started this secondary trend or this counter trend move to the downside. We still have a trend, an overall trend to the upside in place. The low has not been taken out of the 97.36, so we are still overall looking for further advances to the upside. What we would like to see in the US dollar index, if we could come back and test the next key of support to the downside, the 97.79, this would be an area we could start to look for bullish reversals in the dollar index, and this would be an area we'd start to look for further advances back to the upside, up towards the next key of resistance, the upside and the target set at the 100.01. Now it's important to note that because of what we've discussed in the S&P 500, it is not just as simple as going into next week with a bullish bias on the dollar. We could continue down, we could even correct. So it remains a little bit unclear as to what the dollar will be doing next week. This means we're going to be trading the currency pairs on their own merit. That means the way they are currently structured without a strong bias in the dollar one way or the other. The next market we're going to look at is crude oil. Now last week we had this reversal to the downside in crude oil, and we had this big sell-off as fears over the global economy continued into last week, and we had that big sell-off in the S&P 500. Going into this week, we're only looking now for further declines to the downside. We're looking for a continuation of this big sell-off to the downside last week in crude oil. What we would like to see as we're coming quite close to the key of support to the downside and the target set of the 42.21 is if we can get a pullback, and any pullback in this area is going to be viewed as an opportunity to start to look for bearish setups. Usually we like to come back and retest broken support, turning resistance, which in this case would be the 52.34. It's quite a long way back. It doesn't look, in my opinion, like it's going to come all the way back to here. But any correction, the deeper the better, as this would give us better setups in terms of risk to reward to the downside. Any correction in this market is going to be viewed as an opportunity to look for bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 42.21. So the next market we're going to look at is euro dollar. Now last week we were looking for a pullback in euro dollar, further declines to the downside. We did get a pullback, but we didn't have any reversals to the downside. You can see this counter trend move is still intact. What we would like to see going into this week is we have not taken out the high, so the overall downtrend is still intact as it stands in the euro dollar. We would like to, now we've had this deep retracement as well, it gives us a good chance to start to look for setups with better risk reward to the downside at the 1.0679. We'd like to see going into this week, especially as we're sitting at a key area of resistance at the 1.1039. This is going to be a great place next week to start to look for bearish setups in euro dollar. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set at the 1.0679. The next market we're going to look at is pound dollar. Now last week we started the week in this area and we highlighted a key area of resistance to look for bearish setups in pound dollar last week at the 1.29920, which was right here. And you can see we did come up and tested this key area of resistance last week before a really nice sell-off, and we came and took out the target set from last week at 1.2807. So very simply put, going into this week, we are looking for further declines to the downside once again in this pair. What we would like to see is we're coming very close to the second target set from last week. If we can get a pullback, and as always, if we can come back and retest broken support, turning resistance in this case at the 1.29570, this would be a great place going into next week to once again start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set at the 1.2707. And if we can get a break through here, we're going to be looking down towards the next key of support to the downside in target 2 at the 1.2583. So next market we're going to look at is the US dollar Japanese yen. Now last week we saw a big sell-off to the downside. We had a big reversal in the US dollar Japanese yen, and this was a currency pair last week which we saw majorly affected by the sell-off in the S&P 500. As this risk-off attitude took hold and we saw money coming out of the S&P 500, we saw it going into safe haven assets like the yen, like the Swiss franc, like bonds. And we are looking for continuation to the downside now in the US dollar Japanese yen. We're looking first of all for a correction to take place because markets do not move in a straight line. But what we would like to see is any pullback in this area is going to be viewed next week as an opportunity to start to look for bearish setups in this market. Preferably, as always, if we can come back and retest broken supports, turning resistance at the 110.150. This would be a great place to start to look for bearish setups, and if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set at the 107.24. So next market we're going to look at is Aussie dollar. Now last week we were looking further declines to the downside in this market, and we did come and take out the target set from last week at the 65.27. Going into this week we're looking further declines in this market. As you can see, although we had the yen appreciating against the US dollar last week, that is US dollar yen to the downside, we had the Australian dollar depreciating against the dollar, and this is why we do not have a strong bias in the dollar one way or the other this week, because varying strengths are coming into different currencies for different reasons. Safe haven currencies such as the Swiss franc and the Japanese yen have benefited, whereas commodity currencies like Australia, New Zealand and Canada are suffering the most because of their strong trade links to China. So very simply put, going into next week, we're looking for further declines once again, and we're looking to trade this to the downside once again next week. If we can get a pullback, and as always, preferably if we can come back and retest broken support, turning resistance in this case at the 0.6585, this will be a great place going into next week to start to look for bearish setups. And we're going to be looking at initiating shorts down towards the next key of support to the downside in the target set at the 0.6286. Now, something to note going into next week is that the 0.6286 is quite a way down, so we may not achieve this next week. If you want a near-term target, an intermediary target for next week, you can look at the 0.6400 round level. But overall, we are looking for it to come down, even if it takes a couple of weeks, to the 0.6286. So next market we're going to look at is New Zealand dollar. Now last week we were looking further declines to the downside in this market, and we did come and take out the target set from last week at 0.6236, which as you can see is right here. And we are looking once again further declines to the downside in this market. It is still structured to the downside. We do have some momentum coming in here from last week. What we would like to see as always is if we can get a pullback, and preferably as always if we can come back and retest broken support from the past, turning resistance in this case at the 0.63050. This would be a great place going into next week to once again start to look for short positions in New Zealand dollar. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key area of support to the downside in the target set, the 0.6128. So next market we're going to look at is US dollar Swiss franc. Now last week we saw, just like in the US dollar yen, we saw the safe haven characteristics of the Swiss franc playing out as we saw that sell off to the downside in the S&P 500. Going into this week we had a reversal to the downside. We are now looking further declines to the downside as a high probability play, and we're focused on bearish setups in this market next week. If we can get a pullback, and as always if we can come back and retest broken support from the past, turning resistance here at the 0.9780. Any pullback in this area, but if we get the pullback, preferably to the broken support, turning resistance, this is going to be a great place to start to look for those bearish setups. And if we get the right kind of bearish setups in this market, we're going to be looking at initiating shorts down towards the next key of support to the downside and the target set, the 0.9543. So next market we're going to look at is US dollar CAD. Now last week we broke out of the range top. We were looking for a range breakout. We broke out of the range top at the 1.32750, and you can see retested, broken resistance, turning support at the 1.32750. And we had this rally to the upside in US dollar CAD last week. Very simply put, going into this week, we're looking for further advances to the upside in this market. What we would like to see first, as we're coming up towards the targets here, is we'd like to see a correction, a pullback. Any pullback in this area is going to be viewed as an opportunity to start to look once again for bullish setups. And we're going to be looking, if we get the right kind of bullish setups in this market next week, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set, at the 1.3499. And last but not least, we have gold. Now, last week we were looking for further advances to the upside in this market, and we did come and take out the target set from last week at the 1661.60 before we had this big sell-off to the downside with that steep move down in the S&P 500. We came back and tested the key area of broken resistance, now looking to turn support, which we highlighted last week, the 1585.48. So very simply put, going into this week, this is now an opportunity to start to look for bullish setups in gold. And if we get the right kind of bullish setups in gold and we do not come and break the low down here of the 1561.52, if we get the right kind of bullish setups in this area, we're going to be looking at initiating longs up towards the next key of resistance, the upside and the target set at the 1689.40. So that is it from me for this week, guys. As always, I hope you enjoyed this video, and if you did, please let me know by liking, sharing and subscribing. A big thank you to everyone who does that on a regular basis, and a big thank you to all of you who have subscribed to the channel so far, and also those of you who comment on the channel on a regular basis as well. I want to wish you all a fantastic weekend, and I want to wish you all the best in your trading next week. The only thing left to say is take care, and don't forget to trade safely.